Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So I want to talk about what I would say is the most important moving average if you're an investor. All right. Now, if you're interested in doing more trading oriented type things, it can be applied to lower time frames. However, this line will help you even if you're a trader. So let's go ahead and get into this agenda. I call it kind of like the granddaddy of all moving averages, and that's the 18-month moving average. And I'm going to show you why, not only for the market, but for your individual stocks, you want to know what's going on with this line, how your stock is reacting to this line, and whether it's giving you a bias or not. And if it's not giving you a bias, we need to know how and when it can start to give you that bias again. I'm going to go through all of that in the lesson today. Once we're done with that, we'll go through the individual symbols that have come through this week. All right, let's go ahead and get into this now. Okay, so I've got a monthly chart of the SPY up with one moving average, and that's the 18 MA. If you're an investor, I'm going to show you why I think this is the most important line to keep an eye on, and not just in the S&P. I'm talking about for every individual stock that you're interested in. So let's just start with the beginning of this chart. We dates back to 1995, where we crossed above this 18 MA and it started rising. And from 1995 until 2001, maybe even into, well, it was probably around 2001, we basically maintained this line or respected this line and then broke it here. And then if you notice, we went through a period of about two years, so basically broke it in 2001 and then bottomed in 2003 and then turned back up. And if you notice here, we went several years before breaking that line again. And you can see, so it's one thing to break the line and hold it, but to see how it continues to test it along the way and how important it was until it broke it here. Then it broke it, and then it not only broke it, it tested it and failed at this line. And then we got a really harsh, obviously a terrible bear market in 2008 because it got really far away from this line. Okay, you want to be aware of that. So there's two ways to look at this. One is, are we trending above this line? All right. Or are we trending below the line? Okay. Or are we stretched from this line? You see how far away we get from this line? That's also giving you important input that can be used to your advantage to trade this. So I'm saying, even though you might not take a trade to the short side because this is declining, you know that you're stretched away from this line, that maybe you could make money coming back up. But then we get back above this line, test it, tried to break it, but it stayed rising, tried to test it, and basically held until we got to 215, 216, went through a correction phase. We didn't roll the line over. It didn't turn bearish, but it was a pretty severe test, violent move downward, and took a while to get going again. Then we get going and we go up, and then we have some, again, really violent moves to the downside. But if you look at the way these played out, they had one close below and then one close back above. You see how they got right back above the next month. So these are monthly charts that where you're having violent moves against it, but these lines are still rising, and then you're getting right back above. Now, look at what's taken place recently. We had a clear break of this line, and it rolled over. For the first time, really, since back here in 2010, we had a clear rollover of the 18-month. We're talking about, 12 years where this line was rising, okay, or flat. It never really turned down. Now we've turned down. The most important thing to me is we failed at this line here, and then we came down, and then look at the lack of respect for the line. Remember this lack of respect? If we have lack of respect, we should be looking for potentially a shift of trend. However, we've moved up. The only way you can know for sure that we're going to regain respect of the line is that it's got to test it and prove itself. It's going to need to come down and hold that line and turn back up from it. If it comes back down through it again, then we know that this line is actually a little less important right now. in terms of looking for pullbacks to it or rallies to it. We're getting to a point where if this fails at this line, that we don't have respect, and we're probably going to trade around the line rather than use it as support or resistance. These are all, I think, incredibly important factors that you should be looking at for any individual stock. If we go and we look at what's going on in Amazon, look at how when we finally got things going in 2010, it respected it. It tried to break it in 215, but remember what the market was doing through this period. This stock was holding up really, really well. And then another test here, no break, another test here, no break, another test, no break. And then we break the line. And we break the line here, and this goes back to 22. We get a harsh move down, and then look at the failure test. You see how this line is rolling over, and we fail and test at it? Now, we make a move down, and we get kind of stretched away to the downside, and look at what happens. We cross back above. But what we don't have is a test of this line proving that we have respect for it. If it comes back down below, then we know we don't have respect for the line, and there's nothing that we can that can be used here. But if we hold the line, then we should be looking for a new ensuing move to the upside. Similar to how when we broke the line here and we failed at this line, we should have been expecting more downside action. So use this for your individual stocks when you're going through. It's going to be really helpful, even if you're a trader. Let's say you wanted to trade off of a daily chart or even an hourly. If you know that you're stretched away and you're down 1 month, 2 month, 3 month, 4 month, 5 months in a row, and you're stretched away from the 18-month, you know that that longer term bias is sort of pulling you back up. All right. So use that to your advantage, just like when it was here and it was up 1, 2, 3, 4, 5, 6 months in a row. We knew that we were really stretched away and we shouldn't be looking for longs anymore. Right. So, keep this in mind for every stock and for the market. We want to keep an eye on this for the market as well. It gives us a really good idea. Let me tell you, if the S&P can hold this 18-month, then I think we're moving into an area that I've been discussing the potential for, which is this, like what happened in the 70s, where we just channeled sideways and we had bear market, bull market, bear market, bull market, bear market. It just happened over and over and over again. And that's where we're not respecting this line. So this will be an incredibly important thing to watch. If we come down and we test this line and it turns back up from there, that would be a very bullish sign. If we come back down and we fail at it, then I think we have to really, it really increases the risk of what's taking place, and we should be thinking more like a trading range at that point. Once we can get respect for the line and it's rising, then we know we've got a new trend started in either direction. If we fail at it and we start to decline below it, then and we have a declining moving average, then we know we have a trend to the downside. All right, keep this in mind on every individual stock you look at. If you're enjoying the content, hit that like button and also subscribe. Also, my research can be found at rabilstockresearch.com. However, if you're interested in learning more about how I go about things, my method, I would suggest starting with the book. Most of the guys that have really gotten a real good feel for what I'm trying to do started with the book. So I'm offering it a discount right now. If you go to rabilstockresearch.com/book, you can get details on it. All right, let's get into the individual symbols now. Okay, let's briefly start out with the spider. I'm just looking at the weekly chart. I want to point out a couple things that I think are very important to me. So first of all, you can see this trend line that was broken. All right, that was the one in the change in trend after we had gone through this bear market. 2 was coming back through here, this test of this low, which was a pretty good 50% retracement. From this low to this peak here, we got a 50% retracement, and then we turned back up. And here, really in May, we started to kick into the upside. This was the 1, 2, 3 change in trend. And we had a really good period there for 3 months, something like that, where really lots of good participation. Saw some improvement overall in the lists that I go through extensively, thousands of charts. And then we made this peak. Now, What I want to point out now is how important this level is that we're coming into. I'm basically just rounding out to 420. It's 4,200 in the S&P. So you can draw in your trend line. I've drawn it in. We're basically half the bar is below it right now. We're trying to close back above the trend line that I've drawn. We also are coming back to the 4,200, which was the start of the move, right? So I've put in this horizontal line across. We're back to that level, or very close to it anyway. But if you take the low from here, this level here, to this high, the 38% retracement is this line right here. You can see is marked there. And then if you take this low to this high, the 50% retracement is right here. So we're coming into this confluence of levels. Now, you can't see it because it's covered up by all the lines, but this blue line is actually the 200-day or the 40-week. I have a 40-week that I use, and that is essentially the 200-day that a lot of people follow. So we just got a lot of things taking place right here that I think are critical, and we need to be on the lookout for a reaction, how we react. There's a few things going against it. Number one, this big red bar crossed to the downside of the 18-week, and now this 18-week line's starting to roll over. I think it's going to provide some resistance even if we can rally here. The other thing that's bugging me is that the MACD is... both of these lines are dropping, and we haven't reached new support yet. We haven't undercut the prior low. So this low is above this low, but this one is too. So we need this to come down below that. So there's things I'm on the lookout for, and I go through this extensively on my YouTube channel on Friday morning. So if you want to tune in, I'll go through all 4 time frames and cover all the market conditions. All right, so let's go and look at a few other things though. So we've got the, I like looking at this microsector of the, I know they call, this is called the FANGs. They kind of call it the Magnificent Seven now or whatever, but it's not the exact 7, but it gives you an idea of what's going on. And what I do is compare it to what's taking place in some of the other areas. So if we go back to our lesson and look at this 18-month line, all right, keep an eye on this on all the charts we're talking about today, and you'll see how I kind of reference it in relation to what I'm trying to, how I'm trying to use this as a tool to give me insight. So we're still stretched away from this line, okay? And if we turn up from here and try and make a move extended, a lot of times what I see is we can make a new high and then you come back down. You just don't, you need to gather enough strength and come back in a little closer to this line before you can make an assault to the upside that's really more meaningful. Now, what's going against it just taking off is, again, we've broken the 18-week, and the MACD is starting to lose a little strength here. We're in a contraction phase when you look at the DI lines. It just looks like it should take some more time in here. The only thing I'll tell you is that this is much stronger. It is way stronger. As we start going through the other stocks, I mean, the other markets, the other indices, you'll see what I mean. So let's just look at the Nasdaq, which is just, so the FNGS is just a subset of the Nasdaq, right? And you can do the same thing with the QQQ. The QQQ is a little stronger than this, and the FNGS is stronger than the QQQ. It's because the more narrow you look, these 5 to 10 stocks that are the biggest stocks are the ones that are holding up. But the more broad you go, the more stocks you look at, the more of a correction we're seeing, the more deterioration we're seeing. All right. So we're coming a little closer to this 18-month. Now, it hasn't really turned up yet, but MACD is holding the signal line, and it's right above the 0 line. So this is not that bad of a setup. What's bothering me a little bit is we've got this sort of downtrend taking place on the daily, and we've got this 18 that's rolled over. So I just think if we spend a little bit more time and let this MACD get a little bit closer to 0 line, I think we could have a pretty interesting setup in the Nasdaq. So something I'm on the lookout for. Now, I wanted to just do the small cap index I've been doing the IWM, but I just thought I'd show a different reference point of small cap. It's essentially the same pattern, but we are coming into some pretty good support here before too long. I think One thing that I'll tell you is I know I use the 18-month line, but if you look at the 18-day, it's the same concept. You see how we've got some air here? And you see the 18-week? You see how we have some air between price and the 18-week and air between price and the 18-day? I mean, we could get a snapback rally, a little bit of a rally here. That doesn't necessarily mean it's reversing or we're going to change the trend or anything. And based on the momentum signs, I wouldn't expect that at all. But we could try and get a little bit of a retracement in the near term just because we're coming into some pretty good support here. Now, what might actually happen is we could undercut these key lows, right? Come back down under 1100, have everyone thinking that we're breaking down, and then maybe get that bounce that I'm talking about. And this would be even more stretch to the downside. So be on the lookout. One thing I want you to keep an eye on, as long as this ADX stays low, if we undercut here, then that really increases the odds that this is not really trending yet, right? Even if we're getting ready to break down from this big sideways pattern, we should see stronger red DI action than what we've seen so far. So just kind of be on the lookout for that. If we look at the 18-month, you can see that that's been declining. We tried to get through it a few times. We haven't been able to do that, but there is a lot of support down here. The only thing that's really bad about this situation is this. This is the relative performance line versus the S&P. And as I've been saying over and over again, as long as this line is below its moving average, it's not a good situation for the general market. All right. And now I do want to point out the RSI 5 has gotten down to 22. I mean, this is a pretty low level for this indicator. So we're due a bounce before too long. What scares me a little bit is if we don't bounce, we should be bouncing here and we're not really getting a bounce. All right, let's look at I want to look at a few sectors real quick. XLE, I've get a lot of questions about energy, and rightfully so. It's one of the few areas that actually has some patterns that have some pretty decent looks to them. But let's just take a quick look here. Look at what's happened. We had the pullback here and then we moved up. Now, I don't mind a little bit of overrun, especially when we do it like this. You see how this was a reverse divergence? Okay, this made a lower low while price made a higher low. So I was totally fine with this. And I was totally fine with this coming underneath. But look at what's happened. We've rallied up for 4 months and we don't have a move above the signal line. So this is a divergent pinch play. This is a divergence and it's a pinch play to the downside. You see what I'm saying? So I've been really reluctant to try. Last few weeks have kind of been like, I don't really like this overall pattern. I think we want to come in a little bit. And now the violence of the pullback is telling me we don't need to be in a huge hurry. So take your time here. Don't feel the need to go diving in because we're coming into support. I think this could take a little time. It might deteriorate a little bit more. We might even come to the 18-month line just based on that pinch to the downside. All right. Now, XLU, I have been getting some questions on this as well. So let's just look at this key support level. And we were holding it for quite some time. It looked more like an oversold condition where we were coming into the zero line and we didn't have any momentum. There's no momentum to the downside. It's starting to kick in now, but prior to this, I'm talking about prior to this, I was saying, there might have been a shot here. But when we go to the daily chart, what was missing is this pullback. If this pullback would have held and turned it back up, then all of a sudden we had a pretty good look to this pattern. It would have been a new low to a new high, higher low, and then turned back to the upside. And we would have been crossing the zero line here. We would have probably held, green would have held. But that didn't happen. It just kept pulling back, and then it just fell out of bed, and it broke this support. So that's a big concern. The fact that we broke that level, I think now you should be expecting resistance on a rally. We could really rally. We're way overdone, but expect some rally up in the high 50s, maybe up around 60. I wouldn't be looking at this as a potential buy now, or most utilities, just because of the damage that's been done needs to be mended. Okay, let's look at service now. So I do want to keep on the theme that I had here. Look at this respect for the 18-month. I mean, and then we break it and we go through our bear market and then we turn back up. Now, one of the points I want to make is that if you go up for years and years and years and years and you're holding this line and then you break it, Does it really make sense that you're just going to start trending again? I mean, it doesn't to me. It makes more sense that this doesn't trend and then we spend some time going sideways, and maybe there's a lack of respect for this line. But for now, what we need to do is you don't have that. You have that in the back of your mind. But what you're doing is you're looking at this saying, okay, we've got potential for like a pinch play developing, especially if we can pull back a little bit closer to the 18 here and this 18 starts rising. We have to respect the potential for this to turn back to the upside. Now, the reason why I don't think it's imminent is because, again, look at how we're breaking the 18-week and that line's starting to flatten out. Now, I think your best case scenario here is a sideways pattern. It doesn't deteriorate to the downside and come all the way back to support, which is 500, which would be great if it did that. But if it does, the best case scenario is it doesn't do that. It just goes sideways. It looks like it's turning back up and it kind of channels sideways for a month or two. And I think that's kind of like your best case scenario. I wouldn't have any problem with this coming down to here and then working its way back, and you'd have a 2 time frame pattern using the monthly and the weekly. Okay, let's look at the Tesla because this is actually pretty important based on the lesson. So we kind of blew it out to the upside. We broke the line, failed at the line, came back down, got overdone, right? And then formed this little ledge. And now we're busting through. But look at what's happening. We're coming back to test this 18 MA, and it looks like it's starting to support that thesis. Like our thesis is, can this hold and start to turn back up? And look at what's going on here. The MACD is supporting that. Right? So look at the volume pattern. We had great volume moving up. It died out as we moved up to this level. So we knew that we were probably in for maybe a little bit of a breather or a correction or whatever. Now look at how the volume pattern's improving again. So this is not a bad looking pattern at all. What's negative here, or I guess what I'd be waiting for on this, is the 300 mark. All right. Look at the 300. We failed at it here, failed at it here, failed at it here. I mean, to me, it's just not worth trying to be a hero. Make this get back up through 300, and then I think you've really got it going on all cylinders again. There's nothing wrong with maybe nibbling at it a little bit. You could do a little bit of buying, I guess, but I would be very careful about getting too long on this one yet below 300. Okay, NXE. So this looks exactly like the uranium. Basically, most of the uranium stocks look like this. Really beautiful pattern, long-term pattern. And this is the breakout, all right? This is the breakout here. I wouldn't consider this the breakout, all right? This, to me, was the breakout area of this consolidation pattern. Breakout, look at the volume pattern, look at the ADX, look at the MACD, everything confirming. Now, the problem I've got with this is the volume on the way down. It's telling me I don't need to be in a huge hurry to buy this pullback. So what I would be doing is watching this 18 on the daily, and I think we'll get the 18 to come down through the 40, MACD come down closer to the 0 line. I think sometime in the next month, something like that. Now, it could bounce around in here. There's a lot of volatility in this group. So it doesn't mean that it can't rally a little bit, but for it to get started in a new leg, I think is going to take a little bit more time. Okay, now HPK, this is an energy stock in the exploration and production area. Now, what's bothering me and what I don't show here, this is the relative strength versus the S&P, but if we had the relative strength versus the XOP, right? This would look terrible. This is not a good stock relative to its sector. So I don't know that I'd have a lot of interest on the long side. I also don't know that I want to play the downside in a group that's been pretty strong. Now, unless I want to trade it, I could potentially trade a rally here because this was an RSI sell signal at this overbought reading, right? And the RSI 20 didn't get above 50. So we could play this to the downside, but it's got to bounce. We're sitting on the 18-week, maybe bounces and fails. That could be a play, but it's only a trade. It's only a trade. Okay, BRBR. So a question was asked about this, potentially buying a partial position here on this breakout. I would either buy the whole position if it breaks out and play it for a quick trade, all right? Or I would be looking for a pullback towards the 18-week. This was our last really good opportunity here. Strong momentum. We actually got into a reverse divergence pattern with this higher low, and we came right to the 18. We got an opposing trend trigger with a nice breakout pattern. You could have even waited for the pinch play or the pullback here and played that for a really nice trade. that you could still be in partial position on. I don't know that I really want to chase this on a breakout after it's already made such a huge move. So I would probably want to see this a little closer to the 18-week line. It's already stretched away from the 18-month. So if you're going to play this for a breakout, I would be pretty nimble. Okay, look at AMD. So I want to go back to our lesson. All right. So holding, and then we break, right? And then we come right, we get stretched, and then we break right back above. So now look at the orderly pullback and look at how this 18 is starting to cup around. You see how the MACD is holding the signal line? We have a pinch play developing. If we can take out the high of one of these bars, so right now we're forming a new bar. If we take out this high during this month, then we've got a pinch play to the upside. Confirm, obviously here, and the green DI is showing improvement. So something to be on the lookout for there. It probably does take a little bit of time just based on what the weekly looks like. We are getting down to 0 though. I don't think there's a lot of downside left in that. Thanks for joining me. My research can be found at rabilstockresearch.com, and my YouTube channel is called Invest Like a Pro. If you have any stock requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.